This video is part of a series which is designed to help you account for lease concessions after COVID-19 related amendment in IFRS 16. In this video, we'll see when a rent concession will be regarded as a variable lease payment. When a concession is a variable lease payment, the COVID-19 update on IFRS 16, which means the relief provided therein, will not be applicable. We will also look at the various treatments of variable lease payments prescribed in IFRS 16. We know that lease liability is the present value of lease payments. At the commencement of the lease payments, as specified in IFRS 16, are included in the measurement of lease liability. Lease liability, in turn, is a component of right-of-use asset. So anything which changes the lease payments should also have an effect on lease liability and in turn the right-of-use asset as well, right? Well, it's not that simple. IFRS 16 also specified those lease payments which do not have to be included in the measurement of lease liability and in turn have no impact on the right-of-use asset recognized at the commencement. In this video, we would understand these lease payments and assess if your COVID-19 related concessions are such lease payments. This leads us to what really variable lease payments are. IFRS 16 differentiates between two kinds of variable lease payments. Type 1, those that are linked to an index or rate, and Type 2, those that are linked to anything other than index or rate. Let's first understand what they are. Those linked to index or rate are lease payments which vary with an index, such as a consumer price index, or a rate, such as an interest rate. For example, if according to the terms of a lease, a lessee will have to pay a lower amount if LIBOR falls and pay a higher amount if LIBOR rises. Such payment could also be linked to market rentals. For example, the periodic lease payments may vary with the average rentals prevalent in the market. For example, if the average rate of rentals in the market increases, the lessee might have to pay a higher amount and vice versa. Similarly, these payments may also be linked to consumer price index or other indices. Now, these variable lease payments which are linked to index or rate are included in the measurement of lease liability. This means that if your lease rentals were linked to market rate of rentals and due to COVID-19, as market rates dropped, you may have to pay substantially lower. If this is your case, then this would not comprise a lease modification, but a reassessment. Because the lower amounts were envisaged in the contract itself, no terms had to be modified to bring about these changes. As and when our assessment of exactly what amounts we expect to pay in the future changes, we reassess our lease liability. There are two various ways or various treatments prescribed for reassessment in IFRS 16. Both of them will be discussed in the next video. But what about the other kind of variable lease payments? In fact, these might be more relevant in the situation arising as a result of COVID-19 pandemic. These are payments which are not linked to index or rate. Such payments may be linked to a variety of other factors, for example, sales exceeding a specified threshold, or the company's PE ratio raises above a specified limit. To be more specific in our example, the terms of a lease agreement may stipulate that if the production in a given period exceeds 20,000 units, the lease rental will be 20% above the fixed amount of rentals. The 20% increase in the amount of lease payments is the variable lease payment not linked to index or rate. Alternatively, the terms could stipulate that if the production in a given period is lesser than 5,000 units, the lease rental would be reduced by 50% of the fixed amount. This is the case of a negative variable lease payment not linked to index or rate. Now, these kind of variable lease payments are not included in the measurement of our lease liability and hence do not form part of the value of right-of-use asset. these payments are instead recognized in profit or loss independently in the period in which they fall due. So, for example, if your lease contract stipulates that in case of a global pandemic, as declared by WHO, lease payments would be forgiven or be reduced. On occurrence of the said event, this will also be a variable lease payment as we just discussed, rather than a lease modification or a reassessment. Also note that this is not a lease modification simply because the terms of the lease have not been modified. Also, it is not a reassessment because those variable lease payments were never included in the measurement of lease liability in the first place. Such rent forgiveness or concession is a negative variable lease payment. This would be recognized in profit or loss in the year in which it is incurred, or rather, in this case, in the year in which it is earned. If this is your case, here is a way of looking at the accounting entry. Debit the interest expense accrued on the amount outstanding during the period, and debit the lease liability by the remaining amount of scheduled lease payment, which would be the repayment of the principal. Normally, the contrasting entry, the credit entry, would be to the bank account because you are paying to reduce your liability. But in case of rent forgiveness, however, you do not have to pay anything from the bank. In such a case, rather than crediting the bank, you will credit the profit or loss to record the gain arising from negative variable lease payments. As we learned earlier, this adjustment has no effect on right of use asset because the reduction in liability was a negative variable lease payment with gain recognized directly in P&L. If, however, we were dealing with positive variable lease payments, the effect on P&L would be that of extra expense and therefore it would be debited. The bank would be credited with the total amount of payment. Finally, similar treatment might apply in case of government-mandated rent concessions. Yes, government-mandated rent concessions may also be treated as variable lease payments not linked to interest or rate. But how? According to IFRS 16.2, an entity shall consider the terms and conditions of contracts and all relevant facts and circumstances when applying these standards. Now, these facts and circumstances include laws and regulations of the jurisdiction. In this context, government-mandated rent concessions may be considered part of the original lease contract, and hence the variability arising due to government determination would be considered a variable lease payment not linked to index or rate. Now, there is a red line, however. According to the educational material published by ISB on 10th April 2020, in applying IFRS 16, an entity treats a change in lease payments in the same way regardless of whether the change results from a change in the contract itself or, for example, from a change in the applicable law or regulation, which clarifies that if the government-mandated rent concessions result from a change in law or regulation, they may meet the definition of a lease modification and cannot be simply regarded as a variable lease payments. Judgment might be involved in determining whether a change in government policy or course of action may be considered a change in law or regulation for the purpose of IFRS 16. In the next video, we'll try to explore whether the rent concessions constitute a reassessment in accordance with IFRS 16.